Good afternoon, everyone, and welcome to Becker and Polyakov's webinar concerning the Paycheck Protection Program. I would like to thank the firm's clients, colleagues, friends, and those who are donors to the Broward County Jewish Federation for attending today's webinar. My name is Berger, and I'm an attorney in Becker's Business Litigation Group. I have the pleasure of being joined today by Michael.myhre. Michael.myhre is the Chief Executive Officer of the Florida Small Business Development Center Network, which is sometimes referred to as the SBDC. For those who do not know, the SBDC has been Florida's principal provider of business assistance for over 40 years. Since 2011, the SBDC has provided 513,107 hours of professional business consulting to 75,000 client businesses. This has resulted in over 250,000 jobs created, retained, or saved, $33 billion in sales growth, $2.5 billion in government contracts awarded, $1.5 billion in capital investments acquired, and over 4,000 new businesses started. Mr. Myhre holds more than 20 years of economic and business development experience. In his role as CEO of the SBDC, a position which he has held for the past 10 years, Mr. Myhre leads the statewide network of more than 40 offices and nearly 250 employees, providing strategic vision and oversight in the continued success of the organization. Today's focus will be of forgiveness under the Paycheck Protection Program, or the PPP. One of the most noteworthy benefits of a PPP loan is that if used correctly, the loan can be completely forgiven. However, there's a very specific process that must be followed in order to obtain forgiveness. Today, Mr. Myhre will be discussing the framework of forgiveness under the PPP so that you can be well situated to obtain forgiveness under the program. After Mr. Myhre has completed his presentation, we will open the floor to questions from you, the audience. Many of you have sent us questions with your registration, and we've tried our best to incorporate those questions into the presentation. To the extent that you have not already submitted a question that you have for Mr. Myhre, please do so through the chat function, and we will try to answer as many of those questions as possible at the end of his presentation. So with that, I'd like to hand over the floor to Mr. Myhre.
Great. Thank you, Evan. I appreciate the introduction. First and foremost, I pray that everybody is healthy and well. As Evan introduced me, I am Mike Myhre. I'm the CEO for the Florida SBDC Network. I'll introduce the network here in a minute, but we're huge advocates of the Paycheck Protection Program. But as things continue to evolve, we also understand the frustrations and anxieties that you as small business owners may be facing. So I'm happy to be here with you today to provide a little guidance about what's going on with the Paycheck Protection Program and to make sure that you're informed about the assistance that is out there and available to you. I'm going to do my best to navigate the presentation here. I'll never be able to underestimate the importance in which small businesses are to Florida's economy. You know, Florida prior to COVID-19, was home of 2.5 million small businesses. And our business ownership rate per capita was greater than any one of our large state peers. In Florida, so therefore Florida really is a big small business state whose economy and our health and well-being is really dependent upon our small businesses. Nearly 90% of all employer businesses in the state have 20 or fewer employees. And it's our state small businesses and small business employers that are providing, more than 40% of our total jobs for the private sector, but are creating more than 3 out of every 4 jobs, new jobs for our economy. But I think most importantly is to really understand that it's really the activities and investments of our small businesses that support nearly half of Florida's $1.1 trillion economy. So it's really in Florida's best interest and our policymakers' best interest to support our small businesses through these very trying times. In case, our guests today, our participants today may not be aware, the Florida SBDC Network is the state small business development agency. We have 9 regional offices throughout the state located in each one of our major population centers, with more than 45 offices across the state that have 250 professional employees that are committed to the success of one thing. But most importantly is really, what is our why and why do we exist? How do we do it, and what do we do? Our why, at the Florida SBDC, we believe that we create unimaginable possibilities. That is, unimaginable possibilities for the prosperity of our state's most important economic contributors, our 2.5 million small businesses that I indicated earlier. And because we understand the contributions that our small businesses make to our economy, into our communities, we believe that we're helping, by helping our small businesses succeed, that we're helping every citizen in Florida. How we do this is really by investing in the intellectual capital with the expertise, the experience, and the resources and tools that small businesses need to, one, give them a competitive advantage over their larger counterparts and compete on a world market, but two, to create and execute strategies really for long-term sustainable success. What we want more than anything is we want every one of our small businesses to achieve long-term growth and success and not be one of those statistics as it relates to a failed business venture. What we do is really provide small businesses with access to unbiased and confidential professional business consulting that's delivered by certified professional business consultants and specialists, individuals who are generally small business owners themselves or were small businesses themselves, and really focused on one thing and one thing only. And that's really helping our small businesses thrive in the best of times and helping them survive during the worst of times. Best of all, we provide, as I said, our professional business consulting at no cost to our state's small and medium-sized businesses. One of the services that I am really most proud about, and that's really near and dear to my own heart, is really helping our businesses prepare for and recover from disaster events. Unfortunately, as most of you are aware and probably have been impacted here in Florida, disasters have become not a matter of when, but if they will occur. Thus, the Florida legislature has designated us, the state's, as a member of the state's emergency response team, which we are recognized as being the first responders for small businesses following a disaster event. One of the key responsibilities that the Florida SBDC has is leading in the coordination and the facilitation and access to our state and federal resources that our small businesses really need to sustain operations throughout a disaster event and ultimately successfully restart, rebuild, and recover in the aftermath of a disaster event. The Paycheck Protection Program. There is no doubt that COVID-19, the coronavirus, is having an adverse impact on our nation's and our state's most important economic contributors, our small businesses. Today I heard from the Assistant Secretary in a board meeting with Career Source Florida that the Assistant Secretary for the U.S. Department of Labor, that is, that the U.S. economy has lost over 40 million jobs over the past 3 months. That's astonishing. But what's really not often talked about is that nearly 60% of those jobs that have been lost were lost by small business employers. Now, recognizing that the policies being enacted to protect the health and well-being and welfare of our citizens were really having an adverse impact on the health and well-being of our state's small businesses. On March 27th, in an extraordinary and unprecedented way, Congress came together in a bipartisan way to quickly act and pass, what was known as the Corona Aid, Relief, and Economic Security Act, or better known as the CARES Act. And the CARES Act really offered very favorable relief and emergency capital for our nation's small businesses, including the new Paycheck Protection Program, or the PPP loan. Now, I think it's important for me to express this, and that you understand that the PPP is a new program, and therefore the regulations and guidance that are being published almost on a daily basis that exist today could change tomorrow. Therefore, the materials and information that I provide in this presentation and how we interpret, the current regulations and guidance as of today could change. So it's important to stay attuned to those changes and how they would impact you as a paycheck protection borrower. So therefore, it's not a replacement of the professional guidance that you should seek from your attorney or tax or even local SBDC professional with respect to your own individual circumstances. It's important that this is an overview of the PPP and the forgiveness process, but you could have some unique circumstances or questions or inquiries, so therefore you should seek professional assistance. Congressional update. Even before the coronavirus in the pandemic occurred, one of the biggest challenges that our small businesses faced was recruiting and retaining employees. Regrettably, the coronavirus hasn't made that any easier. The majority of small businesses didn't have access to sufficient resources, financial resources that is, to keep existing employees on payroll while their business was either reduced or even closed. And Congress recognized this and created the Paycheck Protection Program to provide our small businesses with this emergency financial capital to keep or retain their employees employed, and really increasing the chances of the business to be successful in a relaunch and recovery. Throughout the implementation of this new program, we have heard and have shared the challenges and needs that our small businesses have faced with the program and otherwise, and shared that information with our members of Congress. And I'll tell you what, our members of Congress, our 29 members of Congress here in Florida, really have listened and really have advocated for real changes, including changes to the Paycheck Protection Program. So as last evening, Congress finally passed the Paycheck Protection Program Flexibility Act, really making a lot of changes to the Paycheck Protection Program that were necessary and needed by our small businesses in Florida. These include those things that are listed there, including extending the period in which loans can be forgiven, extending the loan forgiveness period, extending the loan terms for non-forgivable amounts. I'll cover each of these changes throughout my presentation in applicable areas. I think it's always important to keep in mind what the purpose of the Paycheck Protection Program is really all about. One of the biggest challenges small businesses faced, as I said, was really recruiting and retaining employees. And any small business that had experienced turnover or loss of a key employee can understand the loss of productivity, the missed business opportunities that had been suffered, or even how much or how long it took to replace that particular employee or talent. And as I said, regrettably, the coronavirus has made that worse. When Congress created the Paycheck Protection Program, they really intended that it would provide our nation's small businesses with those emergency financial resources necessary to keep or retain those existing employees employed, including self-employed persons employed, and really increase the business's chances for successful recovery. A quick recap of the program. I don't want to go into, this is how you apply for the program, but I think it's important to understand some of the overviews of the program itself and some of the changes that have been made that may impact you as a Paycheck Protection Program borrower. So a quick recap in some of the new updates with the new legislation. Qualified businesses can borrow up to the lesser of 2.5 times their average monthly payroll cost, or $10 million. Again, whichever one is less. That hasn't changed. But after the passage of the CARES Act, the SBA assigned a 2-year maturity date to these loans and a 1% interest rate to any portion of the PPP loan that was not going to be forgiven. The new legislation that was passed last night actually extends the term period from 2 years to 5 years. Now, if you're a Paycheck Protection Program loan recipient already and your loan agreements indicated a 2-year term, you can renegotiate that term with your lender. You simply need to go back to them and indicate that you're looking for any non-forgivable amount to have that term be expanded from 2 years to 5 years. Also, on the new legislation passed last evening, you can spend more of the loan proceeds on non-payroll cost. A business is eligible for forgiveness, and what I mean by forgiveness is that that loan does not have to be repaid. Now, if 60% or more of the loan proceeds are used to maintain the full-time equivalent staff on payroll, and with no more than 40% or less used for those other allowable operating expenses, that rate or proportion used to be, prior to the legislation passed last night, 75% or more had to be used on payroll, and 25% or less had to be used on these other allowable operating expenses. It's important to understand, and this may change. The CARES Act indicated that to receive loan forgiveness, an eligible recipient has to spend now at least 60% of the covered loan on payroll cost. And if the borrower fails to spend 60% of the loan proceeds, and this is our interpretation of it, on those payroll costs, that none of the loan will be forgivable. And it'll convert into that repayable loan term of that 5 years at 1% interest rate. Now, this is one of the things in which I think additional guidance will be given and ultimately probably be changed. But I just want to make you aware that this is how the legislation currently reads. But I would expect or hope that SBA and Treasury will provide some additional guidance on that fact. Now, with respect to loan forgiveness and really what you need to know, some of the important updates following the latest guidance that has been issued and the new application for forgiveness that has just been recently released. Again, remembering that the purpose of the program is about retaining employees and maintaining employee wages, and that the majority, that is 60% or more of the PPP loan proceeds, must be used for payroll costs, which includes wages or salaries and commissions and tips, everything in which you would consider to be cash compensation to an employee. The remaining amount, that is that 40% or less, can be used for interest on mortgages, commercial property, rent or leases, and certain commercial property utilities. I'm going to take a deeper dive into each one of these. So with respect to qualified payroll, we get a lot of questions about, what's included in payroll. Payroll includes all gross wages, overtime paid leave, any allowance with respect to dismissal, separation, even bonuses and raises. However, it's important to understand that, that the forgivable amount is capped on a per employee basis. And this is on a prorated basis of up to $100,000 of the maximum wage or compensation paid to an employee. So when you use all of the calculations, or you do the calculations, what you're talking about is no more than $15,385 per employee may be forgiven with respect to the forgivable portion. When we talk about other payroll costs, these are the employer contributions for the employee health insurance. These include the employer contributions that the employer makes to sponsored group health plans, dental or vision plans, retirement plans, and the employer's share of the state or local payroll taxes, which we don't have here in Florida. What is excluded or not included in payroll is workman's compensation and any federal employment taxes. Now, this is an area I'm glad to see a lot of clarification. When we talk about that other 40% or less of the loan proceeds that can be used, the new PPP Flexibility Act, the act in which bill that Congress passed last night, and the application for forgiveness provides certain clarification with respect to personal and real property that can also be forgiven as part of the loan proceeds. It was clear that rental payments on commercial property for offices or storefronts or other real estate, commercial real estate property was going to be included. But the application for forgiveness now makes it clear that personal property items such as copiers, servers, autos, and other common items of personal property that are leased for business purposes will be includable in that bucket of non-payroll costs that could be forgiven as part of the Paycheck Protection Program. Similarly, the application also makes clear that a business's a mortgage interest payment included for loans of real property and personal property. But as a result of the interest paid also on equipment or autos or other property items are now also includable and can be forgiven. With respect to the time period and flexibility of payroll, the Paycheck Protection Program loan borrowers, may be eligible for loans forgiven if the proceeds are used for eligible expenses over a 24-week period, commencing when the loan was first dispersed. This is called the covered period. The application now provides an option for borrowers to calculate payroll costs using an alternative payroll covered period. That is, that one that aligns with the borrower's regular payroll cycles in lieu of using the covered period that was defined in the law. The alternative payroll covered period will be any 24-week period starting on the first day of the pay period immediately following the loan disbursement. This makes it a lot easier with respect to how to account for these funds specific to the business's pay periods rather than the statutory defined period. Forgiveness tied to full-time equivalents. Again, remembering the intent of the PPP is about keeping workers on the payroll. And forgiveness is tied to having the same number of full-time equivalent employees. So forgiveness will decrease if you decrease your headcount over the covered period. The reduction is determined by looking at the average number of full-time equivalents during the covered period divided by either the period of employees or full-time equivalents that you had during the period of February 15th, 2019 to June 30th, 2019. Seasonal businesses must use this period or January 1 to February 29th of 2020. The borrower may choose which one they actually use. Exceptions to full-time equivalents. This is also new. SBA will now make certain exceptions in workforce reductions if certain circumstances occur, such as an employee who was fired for cause, an employee who voluntarily resigned from your business, an employee who voluntarily requested or received a reduction in hours at the employee's request, the employee who declined a rehire offer. We hear a lot about making an offer of the employee to return to the business, and the employee turning that down due to the fact that maybe they're financially benefiting from the fact of the federal pandemic unemployment assistance that's out there. This is only allowable if the person was not filled. These circumstances are only applicable if the position in which the employee had was not filled by a new employee. Now, please note that these instances must be documented in writing. So if you communicated to an employee who you furloughed or laid off and you want them to return to work because you received a Paycheck Protection Program loan and they refuse to do so, you have to have that offer of returning to work in writing, and you need their decline to come back to work in writing as well. And you want to make sure that that's part of your documentation with respect to the Paycheck Protection Program loan. There also are some what they call safe harbor provisions with respect to the Paycheck Protection loans. If you laid off or furloughed an employee, you must try to bring them back onto the payroll so your headcount reflects what it was during the cover period. But if you decreased your number of full-time equivalents between the period of February 5th, 2020 and April 26th, 2020, you can qualify for that full-time equivalent reduction safe harbor if you restore your levels by now December 31st. It used to be June 30th. And a lot of businesses, given the extent of how long it's taken to execute reopening phases of businesses in our state and across the nation, Congress recognized that June 30th was not enough time, and that our small businesses really needed more time, and extended that to December 31st. With respect to forgiveness tied to maintaining same wages, also remembering again the intent of the legislation, forgiveness is tied to maintaining employee wages. So you need to pay employees at least 75% of their average wage from the period of that they had during the period of January 1 to March 31st. Any amount reduced in excess of 25% will not be forgiven. But you do now have until December 31st to eliminate that reduction in excess of that 25%. Owner employees and self-employed payroll cap. For owner employees and self-employed individuals especially, there is a limitation on forgiveness. Now again, it's the lesser of that calculated amount of $15,385 for a 24-week period equivalent of their 2019 compensation. Non-cash compensation for owners is excluded, effectively removing any healthcare insurance, those retirement benefits, employer-paid state and local unemployment or employment compensation taxes. Updated guidance clarifies that self-employed individuals cannot claim the entire Paycheck Protection Program as income replacement. And what this means is, or at least my interpretation of it is that if a self-employed individual received 2.5 times their average monthly payroll, that is their compensation based on their tax return of 2019, that you can only use up to 2 times that amount for income purposes. I think that additional guidance is going to come out with respect to self-employed individuals, probably changing this particular requirement. SBA can review any loan at any time. What this means is that SBA has the right to review any one of the Paycheck Protection Program loans. The Treasury has offered some guidance with respect to providing a safe harbor from audits or penalties for small businesses with loans of under $2 million. So I think that the principal focus will obviously be on these larger small businesses that had paycheck protection loans of in excess of $2 million. Historically, SBA requires documentation that the borrower tried and failed to access credit from other sources. However, that's not required with respect to a paycheck protection program. But beware that SBA can review loans at any time to determine eligibility and accurate calculations for forgiveness, which the borrower, that is the small business owner, is responsible for. Lenders certainly are required to do due diligence with respect to the application for forgiveness and the calculations made by the business owner. However, the business owner ultimately is accountable for that. As such, so I recommend and highly recommend that you maintain very detailed records with respect to the calculations that you make on your application for forgiveness. And there is a requirement now that you must at least retain those records for a period of 6 years after the date the loan is forgiven or paid in full. Now, how long will it take in order for forgiveness to occur once you make your application for forgiveness? It can take up to 5 months. I don't think that that's going to happen for most of the small businesses, especially for those with loans of less than $2 million. I think the process will probably be much quicker than that, but that's the maximum amount of time that's defined in statute. Because your lender, once you submit your application for forgiveness to your lender has 60 days to review that application and conduct its necessary due diligence. And then ultimately, SBA has 90 days to approve that forgiveness application once the lender has completed its due diligence, hence 5 months. Now, loan forgiveness, some application tips. There is an application that SBA has put out, And this application, regrettably, is 11 pages long and probably just as complicated as a business tax return. It requires you to make all sorts of calculations and really jump around. I include a number of tips in here, and these are tips that we actually received from the National Federation of Independent Businesses in a presentation in which they did yesterday on the application itself. I'm not going to read through all of these or go through the application in detail due to the amount of time that we have in this particular presentation, but the presentation will be made available to you, and you can read the tips and apply them accordingly. You can download the application. There is an application for forgiveness form that you can get from the SBA's website. It's easiest just to Google, Paycheck Protection Forgiveness Application. There is a link there to the form itself. Your lender may develop an online equivalent form that you have to use, or they will require you to use. It may have some additional requirements on it that are not part of the SBA's application. So my encouragement to you is, before you complete this application and submit it to your lender, check with your lender to make sure that they haven't developed their own forgiveness application. And again, there are multiple tips here about what you should look for out there in the application form itself. So just to recap, in summary, be aware that of pending legislation and what it will mean for your potential forgiveness. Again, guidance is being released almost on a daily basis with respect to the legislation that's been passed, given that Congress just passed some updated legislation, very pro-business legislation. SBA now has to make changes to the forgiveness application, has to make changes to the loan guidance in which they provide lenders, and lenders ultimately provide to borrowers, et cetera. We do anticipate, Congress passed the act last night, the Paycheck Protection Flexibility Act last night, and we do expect the president, he may have already signed it, already today. Again, remember the Paycheck Protection Program's purpose, that is the congressional intent, is to keep employees on the payroll, even if the business is not open at this current time, and that the proceeds are intended to really be used for payroll purposes. But again, the legislation has recently changed that says that you have to use only 60% or more of the resources for payroll, and that you can use them for those other allowable expenses as well. But to maximize forgiveness, make sure you don't reduce your employee headcount or try to recover that headcount back to what it was pre-COVID-19, including wages. Make sure that the necessary adjustments, you do those necessary adjustments to make sure that you maximize the full amount of that forgiveness. Also ensure what's left over that you spend on those only on those allowable costs. That is that mortgage interest that I talked about on commercial properties and commercial real assets and utilities, et cetera. If you use them for any other purposes, they will not be forgiven, and they'll convert into that 5-year term loan at 1% interest rate. Lastly, let me say before we roll into the Q&A portion, I would just highlight, that Florida small businesses have really maximized the opportunities of the Paycheck Protection Program. Here are some statistics with respect to that. Nationwide, over 4.4 million Paycheck Protection Program loans have been made. Over 340,000 small businesses in Florida have taken advantage of this and borrowed over $30.5 billion. I think that's great. The average Paycheck Protection Program loan for Florida small businesses have been just over $88,000. And then I'll just close in saying this, lastly, that, remember that you're not alone, that the Florida SBDC is here to help. We have disaster and capital access specialists around the state who can help you understand your potential forgiveness amount And even if you haven't applied for a Paycheck Protection Program and there are still proceeds in the Paycheck Protection Program, how to apply for that. To find your nearest SBDC, you can go to floridasbdc.org, learn more about each of the programs that are available, including the Paycheck Protection Program, and how to get started in working with one of our loan professionals. Evan, at this time, I'll go ahead and turn it over to you for Q&A.
All right, thank you, Mike. I truly appreciate it. That was extremely informative as well as timely, given that we have updates that occurred as recently as last night and this morning. In looking through the questions, I believe that a great number of them have actually been answered during your presentation. So I think that's a good thing, that it was definitely consistent with what those viewing the webinar were seeking. So what I'll try to do is, on some of the questions that either have been answered or were actually updated through last night's regulations, is I'll try my best to either skip over them if they're repetitive, or maybe ask a follow-up question as it relates to the newest regulations that are out there.
Absolutely, and I'll do my best to provide good, clear answers to the questions if I'm able. If I'm not able, I will, say so and refer you to your local SBDC professionals who are better subject matter experts in the whole Paycheck Protection Program than I.
That sounds great. One question is, you mentioned during your presentation that if an employee is terminated for reasons other than COVID-19, just by way of example, for cause, if they did something wrong, how would you go about documenting that in a way that you would know as a business owner that you did your best to, ensure that there was documentation there? Would it be a memo? Would it be a letter to the person that was terminated? What would the SBA be looking for in order to substantiate that?
Well, my hope would be that if you ever terminate an employee, that you document how you, determined and ultimately communicated that termination to the employee. So it could be as simple as whatever communication you provided to that employee, again, about the termination and what cause, and you just simply make that part of your records. Again, you have to hold on to those records for a period of 6 years. So don't go and destroy those, a couple of years down the road. Retain them.
Okay. And as a follow-up question, since we're on the topic of documentation, one thing that came up in a lot of the questions was companies that had to either furlough or terminate employees prior to applying for and obtaining a PPP loan. Now, one of the issues that it seems has come up somewhat consistently is companies have offered an individual their previous position back, and for whatever reason, that individual has chosen not to go back to work in their prior position. You had mentioned during your presentation that should be documented with the employee. Since they're no longer there, would you suggest an email to their personal email, a letter, return receipt? What would be the best way for an employer to convey that to the employee, that they get their job back?
If the employer can convey that to the employee in writing from the very start, my encouragement would be probably to send them a certified receipt letter indicating and outlining in a formal letter on the business's letterhead that you had offered them the position of returning and that they declined that. That way you sort of kind of cover both bases in the event that the employee does not, or has not already communicated to you their decline to return to work.
Okay. And just before I get to my next question, I wanted to state, I had mentioned earlier that if anyone has any questions, they should submit them through the chat. That was actually incorrect. You should submit them through the question and answer section. So I apologize for any confusion. Gary asks, the new provision provided by the SBA has the following term, and I quote, establishes a minimum loan maturity period of 5 years following an application for loan forgiveness instead of the current 2-year deadline set by the SBA. That provision would apply to PPP loans issued after the measure is enacted through borrowers and lenders could agree to an extended loan term, end quote. He then asks, does this relate to if a loan is not forgiven, or does it have a different meaning?
No, this is that if the loan is not forgiven. Any part of the loan that is not forgiven will automatically convert into a term loan of 5 years or at an interest rate of 1%. However, if you're already a PPP recipient or borrower, your loan agreement with your lender might say 2 years at 1%. You simply need to go back to your lender and renegotiate those terms, and the lender should be, accommodating to making that change for any unforgivable amount that converts into that term loan.
Okay. Daniel asks, will the PPP loan appear on my credit score?
That is a good question. I do not know, to be honest with you. My expectation is that this is a loan that you're taking out actually through your lender. And therefore, if you do not meet the covenants or repayment requirements of any forgivable loan, or any non-forgivable part of that loan within the loan terms, it would be handled just like any other commercial loan and could be reportable to your credit agency.
That makes sense. Someone else asks, it appears through the PPP that tips are forgivable. However, tips for service workers in restaurants are generally a pass-through where the customer leaves a tip, it goes to the business, and the business passes it through to the person that provides the service, the waiter or the waitress. In this instance, would those tips still be forgivable from the PPP amount provided to the restaurant?
They are, because they are considered to be total compensation or part of the total compensation or payroll that the employer makes, even though they're tips from the customer directly to the wait staff. They're presumed to go to the employer, to the employee.
Okay.
Again, remembering the cap, and this doesn't normally happen with tip staff, that total compensation cannot exceed that $100,000 threshold. Congress put that threshold in there to sort of kind of cover the bases with respect to, high level compensated individuals.
Someone else asks, does the $15,385 per employee include the other payroll costs such as health insurance, or is that in addition to the $15,385 that's forgivable per employee?
That's a fair question, and I've seen actually misinformation on both sides. It's our understanding that it's actually inclusive, but some of the recent guidance has come out to create conflict that it is excluded from. So therefore, any of those other benefits paid, employer benefits paid, can be added to that particular compensation amount. All I can say is that, I would check with your local SBDC or your lender when you make your application for forgiveness to see if they have any specific or new guidance on that.
Okay. This next question came up a few times, and it's actually been answered. It has to do with terminating an employee for a non-COVID-19 related issue. But this one had a unique twist on it, which was that, normally under his reading of the PPP, even though that person was terminated, given that the idea of PPP is to keep employees consistent, would this business owner have to go out and find someone to replace the now vacant position of the person that was terminated, or would they be able to subtract one position by what needs to be filled by December 31st of this year?
They would be able to it's the latter. So they would actually be able to, they certainly could go out and find somebody. And if they find somebody, then they have to account for that new body or new employee. But if it's the latter, they actually get to exclude them from that calculation of full-time equivalents prior to and after COVID-19. And that's part of one of the schedules that are included in the application for forgiveness.
Okay. One other question, you did touch on this during the presentation, but I saw it asked a number of times, so I thought that it was probably relevant to bring it up again since a lot of people seem curious or concerned. It's from James. He's a sole proprietor and obtained the loan. He wanted to know if he has different forgiveness requirements than an actual corporation, being that he's a sole proprietor.
It took some time for Treasury and SBA to come out with some guidance with respect to the eligibility and how to apply and calculate payroll costs for self-employed individuals. And then they finally did. And they indicated that you needed to actually account for the net profit of the business was seen from 2019. So you had to complete your 2019 business tax return, whatever that may be with respect to the business entity. But you would use the net profit for that business to determine that that's your self-employed income, and then use that a particular amount. My understanding is for the forgiveness amount, you're going to be using that same amount. Unless you have other expenses that you accounted for, other allowable forgivable expenses of the PPP that you accounted for in 2019 as part of your tax return as well. What I would tell James and other self-employed individuals is stay tuned. I would expect that now with the passage of the new Flexibility Act last night and its signing by the President, hopefully today, that you're going to see more guidance and clarification on that fact to come out for self-employed individuals.
Okay. The next question is from Mike, and I think Mike's issue may have been resolved through last night's regulations, but it is an interesting question. Mike asks, my company was unable to use 75% of our PPP loan proceeds for payroll. In order to hit 75%, we gave everyone a one-time bonus with their paycheck in week 8. Will the one-time bonus count towards loan forgiveness?
It will, yes, you did. Bonuses and increases in compensation are all accounted as part of the calculation of PPP payroll. So yes, it would.
Okay.
Again, that threshold though has gone down from 75% to 60% now as well.
As well as the time frame. So yes. That should resolve hopefully a lot of people's concern in that regard, since it did come up a number of times in the question. Marley asks, in addition to a PPP loan, I was given an EIDL loan. I have not yet accepted the EIDL loan. If I do, would I still have to have the PPP? Would I still be able to have the PPP loan forgiven?
Yes, you can. You can have, but one thing that you do have to account for is that if you received an EIDL emergency advance, that part of it isn't forgiven, and you have to account for it in your application for forgiveness when you file that with your lender. So it's just one nuance that you would expect. But if you receive the EIDL loan, that's the repayable part of the EIDL program. No, you don't. It's fine. But you can't use the proceeds. The expectation is you can't, it's the double dipping. I call it the George Costanza, you can't double dip. So if you receive the EIDL loan and you use it for the exact same purposes that you use the PPP loan for, you can't double dip. So use the EIDL loan if you accept it for other operating expenses that are not forgivable expenses underneath the PPP.
So you can't double dip a CHIP or PPP and EIDL?
No, you can't.
All right. Rochelle asks, is there a limit to the number of rent payments that can be forgiven? I'm behind on rent due to COVID-19 and have not paid rent since March and want to use the PPP money to catch up on my rent.
Rochelle, I believe that you can use them for the proceeds from the period of March or whenever you receive the Paycheck Protection Program loan, or for those back rent payments in which you do owe. I can't think of anything in the legislation or guidance that prohibits that. You couldn't go back pre-COVID. So it has to be from that period in which your lease agreement indicates in the COVID period moving forward.
Okay. Nancy asks, I have a home office as well as a personal car that I use for business purposes. Can I use part of my PPP loan to pay for my home office and car and have it forgiven?
That's a good question. And I would probably say check with your tax advisor, because having a home office and how you account for that on your business taxes or personal taxes can be really, really tricky. I don't believe that there's a prohibition with respect to it. I can't think of one within the regulations, but I would probably check with your tax advisor.
Okay. Now, Stephen asks a question that I think also may have been resolved by last night's regulations, but it's also a question that came up a number of times, so I think it's worth asking. Stephen asks, I don't have enough business to justify rehiring the employees that I had to let go due to COVID-19, as I would essentially have them just sitting around and doing nothing. Do I have to rehire them even though there is literally nothing for them to do?
You do. To be honest with you, the intent of the PPP was really to keep people off of unemployment and keep them employed within our small businesses. So, even if the business is closed or does not have sufficient business, the idea is that you put them on your payroll.
And I guess also when Stephen asked the question, it was under the 8-week term for salary, and it's now 24 weeks, and the time to restore has been extended a little bit. So hopefully with that, Stephen can get his business back up to where it was in the now extended time frame, and it might relieve the issue that he at least is currently facing.
That's correct.
Ray asks a question that isn't necessarily related to today, but I have seen it come up. He said, I never filed a PPP claim. Is it too late?
It's not too late. To my surprise, there are still proceeds in the Paycheck Protection Program loan program. And there may be more resources that are put into it if Congress so chooses to add some additional appropriations, given that they've extended the period of the program. So I would reach out to your local lender. I know that SBA has added thousands of new lenders as certified lenders for this particular program. Just simply go to your business or go to where you bank for your business and ask them how to apply.
Okay. Richard asks, do I have to match lost revenues with the PPP loan amount?
No, it has nothing to do with revenues whatsoever. It has everything to do with those operating expenses, payroll, and those other allowable expenses, and has nothing to do with revenue.
Okay. Evan asks, I have a sole proprietorship and do not traditionally pay myself a salary. I receive what is left in the business and pay taxes on this amount. How would I go about tracking the PPP funds since I do not traditionally receive a set salary?
Yeah, again, self-employed, I expect more guidance to come out with respect to self-employed individuals. But as the guidance had previously provided, self-employed individuals apply or utilize the net profit amount included in their, for most self-employed individuals, in their Schedule C as part of their 1040. I think it's like line 31 or line 32 after you calculate all of those business revenues and expenses. You utilize that amount both for the application of PPP, but also in forgiveness of the PPP. So it's actually, it should be a lot simpler for self-employed individuals than it is for employer businesses.
Okay. Hamid asks, should I, and this is also something that's changed a little due to last night's regulations, should I run payroll on the last day of the 8th week, or is it okay to run it the following week?
The alternative covered period now allows for employers or borrowers to utilize their pay period following the receipt of the loan proceeds and no longer this really fixed defined period. So I would assume that he could probably run it right after that period, or start it right after the period after the receipt of the loan.
And Jennifer asked somewhat of a related question that I also think was solved with last night's regulations, but she wanted to know if she could run a payroll advance at the end of week 8 in order to maximize the amount of money that could be forgiven.
Payroll advance, I'm assuming paying employees in advance of their actual work performed. There's questions about whether or not and I expect that this is going to be part of that guidance that is given. And it's not entirely clear to me whether or not it's going to be cash-based, that is, that you've actually expended the resources or accrued the resources. I don't believe that it's going to be allowed that you can pay in advance employees of work that is yet to be performed. Yeah, I can't see a provision that would allow for that.
Okay. Monica asks, we have an affiliated company with a separate tax ID number. Can we use PPP funds to pay the payroll of our affiliated company?
I don't know. I don't believe so. It depends on how you applied for, I guess, the the Paycheck Protection Program loan. It's going to be associated, actually the EIN number of the business in which received the loan has to be on the forgiveness loan. So I wouldn't believe unless you included the affiliate as part of the overall application for the Paycheck Protection Program loan.
Okay. So that was the last question from the questions that were provided last night. I see here in the Q&A section, we actually have over 150 questions that were asked over the last hour during your presentation, in addition to those that were submitted in advance. I see that we have less than 5 minutes left, and we may be able to go a minute or two over, but I just wanted to let everyone that's listening know at the end of this, we are going to provide on the screen how to get in contact with both myself and with Mike. So if you have any questions that were not answered during this, because unfortunately we'd love to get to all 150 plus of the questions, but time just won't permit, please feel free to email us after, and while it might take a couple of days, we'll do our best to respond to all of your questions at that time.
My request, Aaron, is anybody who does email me to include their business name and location information where that business is located. So I might be able to, in my response, not only answer the question, but also connect the business owner to their local SBDC.
Perfect. One question as I'm skimming through this that's come up a number of times in the Q&A section, you know, acknowledging that they've now made the $15,385 maximum amount per person, they've extended the term of forgiveness from 8 weeks to 24 weeks. So a few people are curious whether or not the $15,385 will go up in recognition of the extended forgiveness period.
No, it will. No, there was no inclusion or changes in that in the Flexibility Act that was passed last evening, nor do I expect any change.
Okay. A number of people have also asked whether Social Security contributions, employers matching Social Security and Medicare, and other related costs such as that can be included in the amount that's forgiven.
No, what is excluded from payroll cost or calculated payroll cost is workman's compensation and any federal employment taxes. So that Medicare, Medicaid, FUTA, et cetera, are not included in the forgivable calculation.
And one other question, it more goes to tangible items, whether they can be forgiven. A lot of people, it seems, rent office furniture, desks, couches, computers, as well as software such as Intuit, QuickBooks, ADP. Are any of the, and internet has come up in a lot of the questions, are any of these costs forgivable under the PPP? I'm sorry for lumping a lot together. I just wanted to try to get the most into one question.
Yeah, no, and you know, reading through the forgivable application, it provides for that real property that is leased by a business to be a forgivable expense. So the way we're reading it is, yes, those things in which are leased or rented by a business are now included in there, in addition to, you know, the rent or lease costs with respect to the commercial property that they may have.
Okay. Another question that's come up quite a bit is just over the timeframes of when someone can begin the application process for forgiveness, and consequently when the last day to apply forgiveness is under the current regulations.
I don't know what the deadline date is as it relates to putting forth the application for forgiveness. But you may actually apply for forgiveness today with your lender. You know, especially if you're one of those businesses that have already expended the loan proceeds in the forgivable ways, in the previous percentages, et cetera. You can make that application to your lender today. Again, your lender then has to do some due diligence to make sure that your calculations are correct. But if you're in that particular position, I would probably get it done sooner than later.
Okay. Another concept that's come up a few times in the Q&A is if somebody has a minority ownership position in a company, 3%, 5%, 10%, I've seen in the questions, is that individual considered an owner employee?
It depends on how they're set up in the business itself. If they're just simply receiving loan proceeds as a flow through, they're just considered to be an owner and not an owner employee. Very rarely, especially with small businesses, do you see that the owner's actually set up as an employee, that is a W-2 employee who's receiving, bi-weekly or monthly payroll just like any other employee at the company. Only in those particular cases is it considered to be an owner employee. Otherwise, it's just an owner of the company who works in the business.
Okay. Another question there seem to be a number of tax questions for you. If a PPP loan is forgiven, will it be taxed as income on your federal tax return?
That is a great question, and Congress actually accounted for that initially in the CARES Act. So it is not considered to be income tax, the forgivable amount. That's a great question.
Yeah. And I'm just looking here. I'm trying to find some new ones that aren't repetitive. What about someone that pays commercial rent for their space but does not have a written lease? Would that be forgivable, or would they have to provide documentation of an actual lease? Could maybe history of payments work? Do you have any idea?
Yeah, I do. You do have to have a written lease because it's going to be part of the required documents that accompany the application for forgiveness that you have to provide to your lender.
Okay. Well, unfortunately, it's after 3 o'clock, and we're out of time for today. Mike, I would like to thank you so much for spending time today and participating in this webinar, putting on an extremely informative and timely presentation, and answering all of the questions that we've received. I'm sorry that time was not on our side today, and there was more information than could have been covered in an hour. But at this time, I'd like to let everyone know if you want to contact me, my email is right below on the screenshot there. It's eberger@beckerlawyers.com. And we also have Mike's email, which is michael.myhre@floridasbdc.org. And while it may take some time, we will try our best to respond to as many of you as possible. And to reiterate, if you have a question for Mike, if you could also provide your location so that he can make sure that you're directed to your local SBDC person who can be helpful as well. So I would like to thank everyone for coming today. Mike, I don't know if you have any parting words.
No, my closing comments would be, there's some small businesses that have been hesitant to go out and apply for a Paycheck Protection Program loan. I strongly believe in this particular program. I think it's probably one of the best things that Congress has done to provide assistance to businesses in times of disaster. And even if it's not forgivable, that is, you utilize those loan proceeds in different rates or proportions to the amounts in which we discussed in the presentation and the Q&A, it still converts into a 5-year term loan at 1% interest. You can't get a better deal than that out there in the commercial market. So I would highly encourage anybody who has not applied for PPP to apply for one and do it sooner than later before the loan proceeds run dry. But also, I'll just reiterate what I said at the end of my presentation is that you're not out there and you're not alone. Your local SBDC is set up to provide, that consultation to you about this program, the Paycheck Protection Program, and any of the other federal assistance that is out there and available to our small businesses during this time of need. So please visit and reach out to your local SBDC if you need that help.
All right. Well, thank you again, Mike, for participating today, and thank you for everyone for listening in. And I hope that this was informative for everyone that was on there. Thank you.